data to help you make better decisions and thinking about your product and how you reach your customer. So for those of you who are not in the BimaLab Nigeria cohort, it's wonderful to have you here. Thank you for joining us today, and we're thrilled to have you. For those of you in the cohort, it's wonderful to see you again and also to see some of your teammates. Please, as you're listening today, draw the connection between the conversation started with Celine last week, thinking about the sales process, right? Sales is all about deeply understanding your customer. So part of today is about understanding the Nigerian customer behavior around insurance and what that helps us to understand and how we actually reach if we're doing direct to customer sales, but also how we can support insurance companies to think about how they position or speak about insurance to actually better connect to their end user, and how we can provide supports to create greater access. So I'm thrilled to be here with all of you. Welcome to our Wednesday evening BimaLab speaker session. If you're on the call and you're loving what you're hearing, invite your teammates so that they can join as well. As I already said, it's wonderful to be here with all of you. I'm particularly excited to be here with two different entities. So first and foremost, we're joined by Chioma and Tomi from Athena. And Athena is enhancing financial innovation and access. A core part of their work is around research. And they're going to help to ground today's conversation in research with a lens to how do we make meaning of the data that we're hearing? What is that data actually telling us? And the person who's going to help us to talk about the data and how he's seeing that data play out on the ground is Tunde Salako. Tunde Salako is joining us from Africa InsurTech Lab. And I'll ask all three of you to do introductions and talk a little bit more about your organization. But the goal is that Tunde can kind of help us to say, here's what the data is saying, here's how we're seeing this play out, and how this then can actually be relevant or applicable to the work that you're doing as an insurtech company. So with that, I'd love if Chioma and Tomi can jump in and just do quick introductions, who you are, your background, and a little bit more about Athena. I know you'll do more justice to that than I can. And then Tunde will have you jump in next.
Hi, Emma. Thank you very much. Good to see you again. I've just said to Choma that I want to have some of your coffee. I don't know what you're drinking, but I mean, you're so happy at 7. This is awesome.
Yeah.
It's 5 here.
It's because this team is so great, and I can't wait to hear from you.
Yeah, awesome. So thank you very much. I'm Tomi Aromosele. I'm research manager at Athena. I think, Emma, you've done a good job just speaking about what we do. I've been at Athena for about 4 years, and I basically manage the access to financial services in Nigeria survey. So that's the FinScope type survey that basically kind of helps us measure and track access to finance in Nigeria. We have a very good module on insurance, and we have over the years used that to support kind of the work that both the regulators and the providers are doing in the insurance space. So I'm happy to share some of that data today. Here with my colleague Choma, I'll just let her introduce herself.
Hello, everyone. I think in Nigeria it's evening. It's good to meet everyone, and we're really looking forward to the conversations we're going to be having. So beyond the data, how the information we'll share today will be useful to you as you're building out your product, as you're selling your product, and as you're engaging, most importantly, with your customer. We look forward to a fruitful deliberation today. Thank you.
Thanks.
Okay, good evening, everyone. Okay, again, Emma, thanks for putting all this together. Chioma, Tommy, great to be connecting here again. Good evening, everyone. My name is Tunde. I'm managing partner for Africa InsurTech Lab. We are a research and consultancy platform, but we also like to describe ourselves as an aggregator, bringing together all the stakeholders in the insurance and technology ecosystem in Nigeria and Africa at large. And we focus particularly on the African insurance space. We're trying to passionately see how we can reverse engineering insurance inclusion on the continent through the technology trends that we're seeing, unfold. We're committed to accelerating the ecosystem through promoting digital insurance and transformation, and we, have this vision to see how these changes can continue to unlock new ecosystems that will birth changes that will grow the continent holistically through insurance. So it's a pleasure to be here, and I look forward to a very interesting dialogue. Thank you.
Wonderful. Thank you all so much. So as I shared, the structure for today's session, the team from Athena is going to walk us through some of their key learnings, and we'll pause throughout to allow reactions from Tunde, but also for those of you who are on the call, if you want to jump in, if you have observations or questions related to the data, please use this as an opportunity to help us to dig into what this data is telling us, and particularly how this data can be relevant to you. So that's sort of key as we lead this conversation. At the end, we will have more time for questions, but we'll sort of pause after each of our main points to allow an opportunity for those who are in the room to engage a little bit more deeply with the discussion. So with that, Tommy, Chioma, I'm going to hand it over to you, and excited to begin learning about all of the learnings you've had from the data you've been collecting.
Thank you very much, Emma. Can you just confirm that you can see this slide?
We can.
Awesome. Okay, so thank you everyone again. We're kind of just speaking to customer acquisition in underserved markets with a focus on insurance. And kind of based on conversations with Emma and Tunde, we think that there are 4 key takeaways that we want to highlight in this session. One is low adoption of insurance, kind of being aware, but then also highlighting the market potential that exists in Nigeria, discussing some of the barriers that I'm sure some of us can relate with, but then also speak to some of the potential channels that we could leverage to drive insurance uptake. And then lastly, to speak to product development and kind of thinking through the cost from the customer's point of view and a human-centered design to product development. So the first one, we are kind of stressing the fact that there's low adoption of insurance in Nigeria. So Athena has over the past 15 years kind of championed the drive towards increased financial inclusion in Nigeria. And obviously we're super excited about the level of involvement, innovation, collaboration that's going on in the space right now. But then over the past 10 years, I think one kind of sector that has been like a thorn in our flesh and has been a constant pain for us is the insurance sector, because you can imagine all the work that has gone in, and then we still see that insurance uptake is still at about less than 5% for the adult Nigerian population, which means that we are way behind the current target that the National Financial Inclusion Strategy has set for us. So the CBN and other key stakeholders had in 2012 set a target to reach 40% of the adult Nigerians with formally regulated insurance policies by 2020. And as at that time, we still were at about 2%. So let me just clarify. you will see some numbers out there that say, oh, 4% or 5% of Nigerians. So this 2% here is just for adult Nigerians 18 and above. Obviously, we know that health insurance is a major product. So that 4% could be children under 18, you know, who also have insurance. So that could be just to clarify. But then just to say that less than 2% of Nigerians have insurance or have taken up insurance products. And you know, this slow uptake is something that as providers we will need to be prepared for in terms of how we reach the market. So in terms of who's using insurance, like I said earlier on, about 2% of the adult population. These are people who are, majority of them have at least secondary school education. Majority of them, 9 out of 10 have a mobile phone, 7 out of 10 are male. But then also when we look at income sources, because that's also a key driver, you know, about half of them are employed in the formal sector. So we know that there's policies driving all of that, but then we also see business owners, right? So there's the need around that, which we will speak to later on in the slide as well. But we also see the informal sector, some uptake there, as well as with farmers. We know that's important across the agricultural space as well. Okay, so pointing now to the needs, right, of insurance. So this data speaks to the Access to Financial Services in Nigeria 2020 survey. So we've basically asked Nigerians, you know, have you experienced the shock in the past 12 months prior to December 2020? You know, a shock that has led to kind of unexpected, expenditure, financial shock, or whatever it is. And you can see that at least 60% of Nigerian adults actually have experienced a shock that could be mitigated through, you know, one way or the other. And when we've looked across kind of the shocks that people have faced, obviously not all of them can be mitigated through insurance, but we do see that 59% of them could have, if they had insurance, an appropriate insurance product could have been, built their resilience or been able to mitigate the effects of that shock on themselves or their household. So priority areas: health insurance, employment insurance, business-related shocks, life insurance, and some others. But then I think health, employment, business, and life insurance are kind of the key areas where people have faced some kind of shocks, and that's, I guess, where the needs are, and that's what we should be looking at in terms of product development. So why should we worry about this? It's really because Nigerians do not have structured, formal ways of coping with shocks. As you look at the information on your screen, you see that 20% of those who have faced shocks actually do nothing about it. So basically, it's like, I just have to live with it, or, if God allows it, I don't have any other means to cope with it. And we know what the implications of that will be on the household, on their income, and on their livelihood generally, right? So others are doing things like adjusting their livelihoods, cutting down on food expenditure, non-food expenditure, kind of comparing prices. So these are all mechanisms, right? But we know that there are challenges with using this kind of mechanisms to manage or to mitigate risk. So there's a place, basically, I think that's what we're trying to point. There's a place for insurance, because when we also look at how other financial services are being used, we do see that formal finance, whether savings or loans, is also pretty low. People are using more of also social mechanism, or selling their assets, or, like I said initially, adjusting their lifestyle. So there is more that needs to be done with regards to the industry helping Nigerians to mitigate and to become more resilient to shocks when they face them. I think even to kind of highlight the market potential more is the fact that we've also asked Nigerians, will you be interested in microinsurance? Will you be? And what we've seen is 18 million adults who do not currently have insurance say, when we've explained to them what microinsurance is, some of the conditions, some of the terms, how, terms of payment and all of those things. They have 80 million adult Nigerians have said, oh yeah, we'll pick it up because we have a need, for this and that. So there is the market for that. Majority of them are in rural areas, men, but we also see, over half of them are youth. So that's, I think, a good, segment as well to focus on. We have, there are also people who have mobile phones, more likely to be secondary school educated to the least. I think something that also stands out here is the fact that 54% of them have BVN, so they are banked. And I think this is a recurring theme that we would like to stress throughout this session, because if people are already banked, they're already formally included, they look like a low-hanging fruit, right? Like a kind of a group that can be easily, kind of with the right products, with the right messaging and all, that we can reach and hopefully kind of get on board them with into the formal space and hopefully take up insurance. So we do have at this point, speaking towards the low adoption and the huge potential, we think we could have a little bit of a conversation. Emma, I don't know if you would want to kind of just lead on this. These are just suggestions. You could also have other questions. But I mean, if you would want to, pick this up, and Tunde can bring this to life.
Yeah. So Tunde, before we dig into questions, I'd love to hear sort of reactions to the data shared. How much is it resonating? Where do you want to kind of have them dig a little bit deeper? So I'll hand it to you first. Tunde, if you're talking, I can't hear you.
Sorry about it. Okay, can you hear me now?
Yeah.
Okay, awesome. Right. So, Choma, thanks for sharing very insightful data. I mean, I think this is it's eye-opening, particularly when you have it being very succinctly appropriated to our own contextual data. There's usually this generalization when it comes to having this kind of information, that says, okay, in West Africa, usually it'll be generalized to say in West Africa or Sub-Saharan Africa. But I think this is in-depth work, because it goes without saying, given the, should I call it post-pandemic era that we're in now, or the post-pandemic era-ish, there's a lot of information that will need to come to light that would be able to aid and abet, businesses as they make, new decisions, transitioning, especially when innovation is being done in the background. So this is very good data. I mean, it's interesting to particularly understanding what household shocks, how they're reacting, and the kind of variables, across all board. I'll stop there for now, Nima. Hello?
Yeah, and I think, as I kind of listened to what you were sharing, I think there were some interesting pieces that you called out around insurance adoption, sort of reasons for it being particularly low. And I think if you actually could just go back to the slide where you talk a little bit about the actual the number of users there are, the amount of smartphone devices, it feels like there's clearly from the data that you're going through, there's people have smart devices, they have the ability to use technology as a tool, and yet the data is telling us that they would rather sell things that they have, reallocate funds to, like, instead of finding a solution coverage, which is, I just think that's really interesting.
Absolutely.
Yeah. So, I think as you sort of think through, and this can kind of come in both from the data side and on the ground side. Yeah, Tematope.
Yeah, thank you so much, Emma, for letting me chime in here. So, essentially, from my own research, right, we have so many people with mobile phones that which shows they basically can buy insurance, right? But have we looked at the pricing? Now, she said when they had a conversation with people about micro insurance, those people said, yes, we're open to it if it is available. We need to begin to look at our pricing point, right? We cannot continue to copy and paste Western way of paying premium, Western way of wording policy document, Western way of collecting premium, and think it will work in Africa. It won't work, especially in Nigeria. It will not work, right? If you come to me with an insurance solution and you're talking about 10 naira, 20 naira, 50 naira, I will listen. But once you start talking about thousands, I'm switched off already, right? So that is why the data Chioma has sorry, maybe I missed the name, right? She has shown us, says we are open to buying micro insurance, right? So once we're able to merge talking to people based off on their needs and their pocket, then we'll see a higher uptake of insurance. Thank you for allowing me to chime in.
Mm-hmm. Yeah. Tunde, Chioma, Tomi, any reactions to the microinsurance and the price point?
So I think it's more, if I could shoot first, I think it's more of the perspective of what we like to describe as a product consumer misfit, right? Because when you look at it holistically, when you start to ask the persona, you look at the persona of the person who is purchasing this product, and then you also look at the relevance to the person, the value, the perceived value to this persona, and how accessible and affordable, which is one of the things that I think Temitope just clearly pointed out. There's a myriad of all these factors that are playing critical roles to this, because at the end of the day, it's somewhat perceived at times by certain personas that, oh, when you use the terminology microinsurance, it's for a product that is below par and will not add the translated value, of what you're purchasing, right? Meanwhile, in actual reality, it's a technical terminology, that actually just speaks to how, you can get the product for just what you need. So I think a lot of enlightenment and education still needs to go around in that, around that, but particularly when you look at the other succinct factors playing around, right? These are real life scenarios of the 21st century consumer all over the world, not only in Nigeria or in Africa, right? There are things that have to be factored in, if in the first place, the relevance is not there, look at part of the data that was shared, that there's just a very, I'm not going to purchase, I'm going to leave things to chance, that's so it just means the persona does not see the relevance. And quite frankly speaking, the trust is also, there's a trust variable for this in Africa, which is very, very strong, that comes out as number one. So there's a lot of factors that surround it, but I think Tope makes a very good value point as well. I will place the pricing as one of the essential and intrinsic factors that affects this. Thank you.
Yeah. Below me?
Okay, so I would like to say that now it's actually going to improve to a large extent, and here's why. We're beginning to see a lot of insurance organizations unbundle their products, yeah, where we used to just have, bundled products like, car insurance. If you can't buy you can't buy this insurance, we will not give you that cover. But in the past year, I would say this was very relevant because number one, there were a lot of regulatory concerns around this. I'll give an instance with Cornerstone's partnership back then with, Airtel Insurance on hospital cover. And within the space of 1 year, they were able to enroll about 1 million customers on that platform. I mean, the premium was as low as 100 naira, and it was to cover, some health issues and, three nights at the hospital. That product itself was, very successful based on the channel that they used. I mean, an average Nigerian has a phone, and so they're able to, at the use of USSD, we're able to enroll or onboard, on that particular product. But then again, we had some regulatory concerns with there was NICOM, there was CBN, and then there was the regulators for the telecommunications who decided that it wasn't okay for Airtel to collect money. And NICOM didn't seem like they had a say, and CBN was also causing a lot of fuss around it. But that's changing. So I'm looking at it that going forward, this we'll begin to see the effect of all of the changes in this policy, as insurance organizations are beginning to understand their market environment. There's a lot of activity ongoing. I mean, that's the reason why we're even on this call, where we have people like Social Care trying to, as much as possible, access people in the rural community to buy insurance through recyclables, right? So again, we'll begin to see this change. It might not be immediate, but in the next 5 to 10 years, all of this would actually have a huge impact in the insurance market.
Chioma, Tomi, any reactions to Temitope's feedback around price points? Has that come up at all as we get more in the micro insurance space?
Thank you very much, everyone. I think I do agree with Temitope. An issue, and particularly when you're dealing with the kind of mass market or even low income. But I think that when it comes to insurance, we also still have a very large pool of uninsured people who are in the middle income class, so there is, yes, price is an issue, but there is still that market where we don't have to go as low as the 50, the 100, and and then there are products, like the data shows that we can actually, if properly designed, can help mitigate some of these needs for this segment. So we are totally in, for FINA, totally in terms of serving the low income. But we think that even for insurance, particularly, just because of the very, very low uptake, there's a wide range of opportunities, that exists there, that everybody doesn't have to just target the bottom. Let's explore the markets in terms of, there are people in the formal employment, formal space, there are people in business owners. So there's a wide range of products and market that can actually be served. That I do believe that, but then price obviously is a valid point. But as we look at some of the barriers, you see that things around even just information is also kind of trust, like Tunde said, and what people know about insurance and how the message is communicated to them. So those things might actually be some of the barriers that even kind of limiting even those who should be taking up insurance from doing so. So yeah.
Mm-hmm. And I guess, oh yeah, go.
Yeah. first, I'd like to make a comment, but also I have a question, and then maybe Chioma can tell me more afterwards. So the question will be, do you have in the data element that shows that cultural factor can be part of the reason? And my comment related to the price point, I think the key issue for me as an actuary, person that involved in design of product, I think one of the key issue is the trust deficit. First of all, the customer do not trust enough the insurance company. The insurance company also might not have enough information in terms of how to get the best price. And also, insurance company also have fears related to anything related to frauds. I think both items are playing into this trust deficit, where each party look at the other party as and do not want to make the first move. And everybody look at each other without regulatory involvement, with lower amount of compulsory insurance, everybody just keep looking at each other. And I think that's one of the key issue for this low penetration in Nigeria. But I would like to hear more if there are some element of cultural element to it in the data that we might also explore.
Yeah, thank you. Yes, there is, and I think the next section will be speaking to some of the barriers, and I think we'll see from there that there's some issues around belief systems, religion, and then the trust strongly highlighted as well. So maybe we'll just kind of leave that till when we get there. We probably can deliberate more on that.
Mm-hmm. Yeah.
Sorry, if I may add also, I mean, you mentioned, actually you mentioned cultural. I think there's also, or rather there is also a systemic overlap on that, right? And what do I mean by that? When you look at the regulatory landscape, essentially, it's different from west to the east and to the south. Now, when you look at the way Africa is often divided to Anglophone and Francophone, your Francophone is also completely different, right? Where you have the CIMA that is regulating up to 14 different countries. And so when you come down to the West, where we are, you look at the adoption models, the mobile money framework, and that's a very critical framework that affects the level of uptake up till date, right? And how is it totally different? So for instance, now, where you look at Ghana and Nigeria, you have about 15 million mobile money agents, right? And it's the same number of mobile money agents in Ghana, in Nigeria. When you look at the population of both countries, the difference is very clear to start with. Now, in places like Ethiopia and in places like in Kenya, you have very, very vast adoption in mobile money, with mobile money having a significant number of agents cutting across these countries, right? And so because of that, you have, so I think Kenya is about 32 million as of date. Ethiopia is about 6 million, right? But the interesting bit about it is you have, Safaricom's M-Pesa, which we all know, working very well in Kenya. You have MTN's Momo agent working very well in Ghana. You have Ethio working very well in Ethiopia. But when you come to Nigeria, you have mobile money agents. They can do other things, right? But because the mobile money framework, even as of last year, 2021, prohibits a telecoms-led or a mobile network operator-led initiative, rather works with a bank-led initiative, it's stifling the growth to a certain extent of how adoption and penetration is taking off through the mobile channel, right? That's number one. Number two, well, I mean, it goes without saying there are different conversations that we've been privileged to have on different fora, or should I say forums, where there are different schools of thoughts that are talking about why it has to be maintained as a bank-led initiative as opposed to a telco-led initiative in other countries that had this increased adoption. But the argument is always, why reinvent the wheel? Why not just replicate and adopt what is already currently working in those clients? These are similar. We're not talking about Western places like North America or Europe now. We're talking about even within the African environment. But suffice to say, that is what we currently have as of today, right? And that is something that has been instituted by the CBN, right? NICOM is, saying they are pro these things, right? A good thing about this particular regime is, they're willing to listen, and they're trying to do all they can to make sure that, they oil all the juices of innovation. But, when you move to a parallel regulatory quota or system, and then you meet this inhibition, and then you now, get diverted to another regulatory authority like NCC, it creates a lot of bottlenecks. So there's a fragmentation currently ongoing now. But as someone said earlier, things will start to look up eventually. I'll stop there now. Thank you.
Before we move to our next set of data, I know we've Chioma, Tomi, sorry, we've moved a little off the questions that you had listed. Is there anyone who wants to react to some of that sort of initial data set around opportunity, market, space, right? That
Yes. Good evening, everyone.
Evening.
Hello. Okay.
Hi, Veronica.
Hi, good evening. I'm happy the research by the EFINA team was able to showcase the pain point of the underserved Nigerian population who actually need the health. Sorry, I work in the healthcare space, so health easily comes to me, the insurance space. Now, I would like to understand from the research conducted by their team, which they feel is most critical to address at this point based on their findings, so that people working in that space on this cohort can actually maybe adopt in the immediate term in the scope of their work. Thank you.
Hi, Veronica. That's a tough one. I think what we've tried to highlight is the needs, kind of the areas where people are facing shocks. But I think every need that we've identified is valid, whether it's with regards to health or with regards to business or employment. This is post-COVID. A lot of people have lost their jobs. A lot of companies have shut down. So I think it's really, I think what I hear from you is the fact that most providers also need a lot of information within those spaces, those subspaces as well, to fully understand the market and in terms of how to position. We could support kind of efforts to understand the market better. We could also even look into the data more, to look at the people who are facing these shocks, look at their financial lives, what would they be more likely to take up. So, but that's not information that we have on this deck now, and we really honestly cannot. I'm not sure we can really speak. I would say that those top three are kind of huge potentials to explore now: health, employment, and business insurance.
Okay, thank you.
Thank you.
Yeah. Thanks, Veronica. So I think, if we there's clearly at this point, right, we have clear data that kind of helps us understand that there's an opportunity, right? We know that the 2% doesn't make sense given the reality of the numbers that are experiencing financial shock, the current coping mechanisms for managing, right, don't actually really meet that need. We have clear evidence that there's people have devices, there are ways they could be accessing security or tools, right? And I think that kind of nicely sort of leads into this concept around barriers, right? And I love, you know, Jim, if you guys want to kind of dig into, right? So we see this clear opportunity. And I think everyone's wondering is like, well, why is adoption not higher? And I think that's a little bit of Ashil kind of digging into what's really getting at people not adopting. And I'd love to begin digging into that more deeply. So I'll hand it back to you.
Great. Thank you very much, Emma. So I think we'll just jump into this because I think we've mentioned some of them in our conversations. So I think when we mention financial services generally, one recurring barrier is issue around awareness. And in the insurance space, we see that play out strongly as well. So just about maybe 13% of adults are actually aware of microinsurance. When you, maybe just a few more are aware of insurance as a whole. But even beyond awareness, there are fundamental issues because when you look at people who are even aware, just about 5% of them actually have insurance. So yes, awareness is an issue, but then there are fundamental issues beyond awareness, and we'll explore some of them. I think what we actually see from the data now, and we would love to hear feedback, you know, from the team on this, is the fact that, you know, people say, I do not believe in insurance. And part of that comes from people not even understanding insurance. So people say, I'm not sure about the benefits. I don't have the information that I need to make that decision. I do not trust insurance firms. I do not settle claims. So there is a lot of issue around the information, the knowledge, people being empowered to have the information that they need to make the decision of whether to take up an insurance product or not. So I think one thing that, internally when we talk about this is the fact that even when we look at insurance as well, there seems to be kind of a very kind of a wide value chain that I think providers should think about playing in. So not beyond providing the products, probably some persons can really position themselves to help mitigate, because sometimes it's difficult when you're starting out to do all of this at once. So probably some providers could also, or players could also position themselves to be able to tackle this issue around information, around products, around the benefits, and all of that. So we think that that's something that we wanted to highlight to this group today. And then when you also look at the issue of trust for insurance companies, you see that that's lagging behind even informal groups, banks, and then mobile operators. This is important because, as we will see subsequently, some other markets, I think Tunde kind of pointed to this earlier on, some other markets are leveraging on banks and even informal groups with regards to distribution. We are seeing from data that in Nigeria, adult Nigerians actually trust these groups more than they do insurance companies. So could we, leverage them in terms of reaching the uninsured? So beyond information, awareness, and trust, there are other factors, other demand and supply side factors that I think kind of are barriers to uptake. So just speak to some that we haven't talked about. So we see when we've looked beyond the quantitative data, when we've interacted with people one-on-one, through qualitative studies, the issue that Timotoko mentioned earlier on comes up, issues around can't afford insurance, right? So they don't see the value in putting that money aside. They're not sure about the benefits, which we highlighted earlier on. And then this issue around trust, because people have seen others who have had challenges with claims. Then there's a cultural issue, which was also mentioned earlier on, religious reasons. And then on the supply side, distribution, a major barrier in terms of the reach. There's also the high cost of serving the low income population. And then we also think the issue of understanding the customer is also another challenge for providers. So I think Veronica asked a good point. Who are these people? What are their, what's the key needs that we should be trying to address? How should we reach them? How should we communicate with them? What do they want? So all of these are issues that we think, kind of based on data that we have, are current barriers to uptake of insurance. And sorry, this should read insurance, not just microinsurance at this point. So I think we can have another conversation around this, because I think this would be interesting to hear your thoughts. So thank you. Emma, back to you.
All right. Fantastic. So Tunde, I wanna hand it to you. I'd love to hear, looking at this, what are the main things you're thinking? For those of you who've already asked questions, what do you want us to dig into more, given the data that we just saw?
Right. Okay. Thank you, Emma. Thank you, Choma, for sharing that again. I mean, it goes without saying, when you look at the supply side and your comments as regards how new service providers should be looking at micro niche areas, and focusing and zoning in on those areas so that they can be able to, build these solutions around the personas of the customers, right? And I know we're still going to deep dive on, looking at customer persona somewhere down the line. That's just that's the new order. That's the way it has to go. Because at the end of the day, why do you see the fintech space, giving some stellar results as of today? It is because, there are different areas within the finance value chain that these tech companies have been able to come up and say, okay, so let's come home to Nigeria now. We're beginning to see things, neo-banking, uptake and adoption, the likes of the Kudas, who are doing over 1 million customers as of today. And basically, what are they doing? They're saying, we hear you, to the customer, and saying, okay, so you can move your money free. We're not going to charge you for your cards. When you move your money or you make transfers to other banks, you don't get debited. And interestingly, some of the traditional banks are also beginning to see these things and reacting and responding, to the market needs. So invariably, what happens is when one provider starts to do certain things, especially in areas that are deemed as murky waters or enchanted waters, it paves way for other people, to be able to do and even improve on these things that are existing. So I think it's a lot to take in. It's a very lengthy conversation that has to do with the supply and the demand side. But critically, as to this conversation and this group, I think it's very important to actually put forward how exactly these areas, because focusing on micro niches are some of the emerging economic trends that we see, not only for Africa, but even in emerging areas like Southeast Asia, Latin America, etc. Right? And the truth of the matter is, just to wrap it up, insurance companies are really doing a lot of heavy lifting. And quite frankly speaking, from their own lenses, it probably costs more, for them to try to deep dive into these areas, because they are going to be focusing on other things which they have to do, and then there's regulation which they have to abide. So they'd rather just stick to their guns, right? So for me, I think it's the looking at the capabilities to sort of mine data which are limited, at this time, creating data-driven lead generation systems through enablers like analytics that can assist to identify lifetime value-based customer segments, and then model systems that would help to identify churn, cross-selling, and upselling. I'll stop there for now.
Thank you, Tunde. Temitope.
Yeah, thank you so much for allowing me chime in once again. Dr. Tunde has reeled out valid point, right? But I would like to, I mean, yeah, I said all that needs to be said in that space, but I would like to chime in on the area of educating potential customers, users of insurance, right? I found out that over the years, in the insurance companies I work with, the people who usually train us about product, about talking to customers, are actually not the core guys who go out there to sell, right? These are like the guys who know, okay, so you are supposed to sell like this, the product is supposed to be like this, and all of that. The way a core salesperson is going to teach you or is going to tell you to talk to a customer is, I mean, way different from how someone probably is just your boss and probably last sold a policy 4 or 5 years ago, right? I'll give an example of PayU. I told my team, right, we're yet to launch, but I told my team we're gathering like a user base wait list. So I told my team to go out and sell to customers, right, with a certain target. When they came back with a whole lot of feedback. One of the feedbacks is that, oh, some people didn't even want to listen to what they had to sell. Sorry, Veronica, I don't know if you can mute. I'm getting feedback from here. So thank you. So they said, I mean, some people didn't even want to look at the app, right? And all of that. Then I asked, how are you selling to the person? They said, oh, I accosted the person and I said, oh, I have this product, I have this. I said, no, that's not how to sell, right? You have to come from the point of the view of the customer. Probably you initially ask this question, do you have a comprehensive car insurance? The answer could be a yes or a no. Let's say the customer says a yes, that I have a comprehensive auto insurance. Okay, how much do you pay annually? Oh, I pay 100,000 naira annually for my comprehensive auto insurance. But do you know that you fall into accidents 92% of time when you are driving on the road? I mean, 92 when you are driving on the road, you have 92% chances to fall into a crash. Person like, oh yeah, maybe not. Okay. If I offer you to pay 2 naira per minute while driving on the road, and if you're driving for 1 hour, you just pay 120 naira and you get this covered, then the person is really ready to listen to you. Because in actual sense, everyone are sold to from the customer's perspective. The next question they usually ask me is, can I download the app now? No one gives me, and at least since I've started building PayU since 2018, I've had well over 6,000 people who are on my waiting list of, oh, always disturbing, when is this app going to be out? Because it's from the pain point, it's from the customer's perspective, right? Salespeople out there on the field sell based off on, they want to earn commission, they just want to get a product sold. Customers read in between the lines. They know when it is that it is all about you, right? So to be able to increase insurance awareness, insurance salespeople, right, need to sell based off on the need of the customer. That's number one. Then number two is our claim perspective. I mean, the claim side of things, right? Let customers have a turnaround time and stand by that turnaround time on claim. If I go to a bank, right, and I want to withdraw my money, so that's why I like to see claim. I put in my money in savings accounts. When I need my money, I go to the bank and I withdraw my money. If I step into a banking hall, I expect that within an hour I should be out. Now think of it that if I go to a banking hall, I don't know when. If probably the manager can even tell me, "Oh, bros, you can go. We'll call you back 4 days time, and maybe the money will be ready." Nobody will keep money in the bank. They'll put money in their house, right? So we need to start looking at turnaround time that is workable. And the customer has it at the back of his or her mind that, oh, if I fall into a car crash in 3 days, in 4 days, I'm going to get my claim paid, right? So we really need to re-engineer our claim process so that, to restore that trust of, oh, they don't pay claim when claim crystallizes, there's no turnaround time and all of that. I think I like to stop here. Thank you.
Thanks. And I think that really speaks to the trust element, right? So part of the kind of the two sides of the coin of this, right, is that in order to increase insurance penetration, there needs to be a focus on how we actually rebuild or rethink what trust looks like. And right, this concept that yes, we're aware, but I either don't believe in it or it's more around I have a lack of trust about it. I think is an important element that comes out. I'd love either reactions to what Tim and Hopefully shared, or are there any other questions based on the data that we looked at? And then I guess, Trina, what I'd love to kind of turn to you is, yes, we have these challenges. I guess this is more of the hope piece, right? What is working? Where is the progress? Where are we seeing the basically rebuilding of trust for being able to kind of create the kind of education required to get people to increase uptake in insurance? Are there sort of companies that you're noticing who are doing this really well, or advice to help companies on this call to think about how to address some of the pain points identified?
Yeah, thanks again, Emma. It's ongoing conversations, right? And interestingly, when you look at the dynamics of how we're wired, particularly when it comes to this trust coefficient issue, right? In fact, you have a higher virality of the disdain and the distrust, which is higher. You know the saying, when bad news travels faster than good news. That's the typical case of insurance, right? However, it's not all doom and gloom. When you look at certain companies that are popping up, even within the insurance technology space, it should be encouraging for all of us on this call to try to see how we can, sort of look at piloting, testing such models. And one of the models that we are seeing, for instance, it can be described more as a captive insurance model, and that's making waves in places like South Africa, particularly, right? And what do I mean by this? It's the kind of the concept where the power, or should I say, the whole of the heavy lifting is transferred to the insuree, the person who is insured, right? And although it has its advantages and its disadvantages, but certain companies, for instance, like Naked, who is doing auto insurance, has been able to build this very stellar model, and they're doing pretty well, having successfully even just raised their Series A last year up to the tune of about $11.3 million. And what they've basically done is to sort of like see how they can build around the customer, on like what Chama was referring to, right? And when as they're building around the customer on auto insurance, they're basically saying, look, when you make your payment for your premium, because it's a captive model, what you essentially do is we take a small chunk out of it as our admin fee, or every other thing belongs to you. Now, such that when you have whatever is left in your bucket left, you can transfer it to a worthy cause that you care about. So I think there's even a video that actually talks about one of their customers who was saying, okay, well, now I know that this insurance is really naked, right? I'm paying for something that I know even if I do not end up using, my money is going towards a worthy cause, which is the typical reaction you will get for the 21st century consumer these days, right? So you can channel the monies if it's not used, if you don't make a claim towards the likes of things like HIV/AIDS, communities with bad water supply, healthy causes like malaria, etc., etc. So you're kind of like still intrigued at the fact that okay, I paid for an insurance, but my money is doing some level of work for me. It's the same thing for another company, also South African, which is called One Spark, right? That's focusing on life insurance, and they're using pretty much the same model. And it's quite interesting how they even look at things. They say they want you to get your life insurance so that you get rich by insuring yourself. So they pay as high as 1 million rand, for people who make their claims. But those are the kind of models that are unfolding gradually, and it's being built around these other emerging economic trends of a secular economy where nothing must go to waste. So you make a contribution or you make a payment for XYZ, and even if you don't use it, you still get some value in return. I'll stop there for now.
Hi. Hello.
Hi, Bolo.
Hi. Yeah, so just to piggyback on what Tunde just spoke about, and I think I spoke about this maybe on our second call or third call, and it goes back to the essence of insurance itself. So the promise of insurance is, protection. That's the promise of insurance. But what most insurance solution does is they are a remedy to a problem instead of preventing the problem itself. That's what protection should be. So
Yeah, it,
you said?
I said that's the practice.
Yeah. So we looked at this critically. We first went into the market and tried to get people to use GAMP last year, and then there was like a lot of questions around. So what happens if my device does not break? What happens to my money? We tried to do like a couple of things around it. We tried to do, you can cancel anytime and get refund. You try to do, you can get some cash back for, but that just was not it. And then we had to go back to the concept of protection itself, and then we said, so what can we actually do to help these people? Because again, like I said, everybody's lives is hinged on their devices. If their device breaks, work stops. People who buy food online, they can't buy food online. People who school online, they cannot school online. And then we said, how about actually protecting itself? So we now made the features on our device protection plan better. And that includes, we added an annual maintenance contract or an annual maintenance service to our device protection plan. So we say that the device protection plan protects you, or it's supposed to be a promise of a repair, replacement, or reimbursement in the case your device breaks. But then we're now saying that in the case your device does not break, the device protection plan also comes with an annual maintenance servicing. So it means that you can request and say, in this organization, we have 500 laptops. If we service these devices regularly, it's going to prolong the life cycle of that device by say an extra 2 to 3 years. So how about just planning that money into annual maintenance itself? So that's
Right.
where the actual protection is. So now let's do that protection. And then in the case where there's now an actual break, then we will now repair. And if we can't repair, we'll replace. I don't know if what I'm saying makes sense. So that's the first part. And then the second thing around this thing is, there's something that word of mouth does that I don't think anything else can replicate. And word of mouth typically comes from people having used the product. So people use a banking app, for example, and say, oh, I didn't need to queue at the bank. I just went on the app and I was able to move money from point A to point B. You know, but then people pay for insurance. There's nothing to talk about there except the experience of I bought it smoothly. But then that's not why they bought it. They bought it to be able to use it. So when they cannot use it, there's no way they can go out and tell people that, oh, this thing actually works. So a couple of things around that. How do we take stories from people who have actually used these things and create virality out of it? Like virality from like single story. How can we take one story from one insurance company, even if it's not a claim for our own insurance company, and then say act like insurance actually works? It doesn't have to be Turaco, a Turaco customer, for example, making um 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 good or telling a good story about using Turaco before I can also jump on that story. Again, the essence is people seeing that this thing works and then we blow it up from there. So that's like my own 2 cents.
Thanks very much. I don't know if I can quickly react to that. I think you put it quite succinctly, Bolu. And the interesting bit is, first off, we operate, for people who don't know Africa very well, right? More often than not, everyone just looks at Africa and says, Africa. Sometimes people are confused and say they believe Africa is one country, if you know what I mean, right? So, but you know that what is happening in the south is different from west and is different from the east. Okay, so for instance, now in the west, we're not um, we're not cost worthy. I mean, that culture is not yet in it here. Okay, unlike what is happening in a place like South Africa, where they are a little bit ahead, if I can put it that way, if I can use those terms, and they're already operating like the West, where people look out for courses and want to, so. But the beauty of what you just described with your own product is the kick-in effect, which is the protection plan you have now, because you have looked at what your consumers, right, your demographics would have a kick-in or a feel effect from, right, and you've been able to incorporate it into your solution. That's the narrow the window effect. That's what we like to term it as, and that's simply when you create when you're in an enclosed room and you create an option that, okay, in the case of a fire or an emergency, you can jump out of the window. That's the kind of psychological effect that plays with people, especially when it comes to an insurance or a financial service product. I don't want to be trapped. I want to be able to have an escape route. So that's speaking to the first thing you said. Then to the second part, where you were talking about how I think the power of storytelling and the brand, how you ingrain your brand for that virality you mentioned, also has to do with the absolute power of narrating and putting an impression in the minds of customers. And I'll give a practical example. A few years ago, actually maybe, I don't know if it's up to 10 years now, right? When AXA Mansard was using this particular advert of a girl who went to school and then, her father passed on or so, but her mom, or maybe it was her mom that passed on. Anyway, I'm sure some of us on this call will know that advert, but at the end of the day, they created a story in the minds of people like, look, this person's mom passed on. She wanted to be a doctor or something, I think. And then they showed her when she was grown up and she became a medical doctor, and her family members were there. And they kind of like just put in less than 2 minutes, put that story and imprinted it into the minds of people to say, oh, get a life insurance policy, right? And that product, the virality it hit, people who were middle-aged, already having some form of non-communicable disease and everything, started buying life policies. I don't have the figures offhand, but it really, really hit the nerve. And it was simply the power of projection, right? So I think everyone on this call, is up to great things. And these are kind of things that we can just continue to, iterate, retweak, and see how we can unlock new value chains and new economies. I'll stop there for now. Thanks.
Thanks today. And for those in the cohort, we're gonna talk about storytelling in more detail this week. I think it's the most powerful tool you have in your toolkit. I've got two hands. We're gonna go to Elias first, and then Dumebi will come right to you. Elias, I'd love to hear from you.
Great. It's good that I'm getting quite interesting discussions happening, and I just wanted to kind of bring a perspective to two components. One, I've heard that there's need to pay claims promptly, which is good, and ideally, what happens in that particular case, that will be an issue that mostly those people that have maybe experienced a claim before would really want to get their claims paid quickly. But also, I just wanted to bring to the attention that there's also need to think about value-added services. So, for instance, I've heard what GAMP has been mentioning. Okay, fine. Do you bring in maintenance, particularly for items such as devices? If you kind of look at the other components, maybe other forms of insurance, because I usually say it's quite easy to innovate around motor insurance. It's quite easy to innovate around ideally rich end type of products. But when it comes to the underserved, there is need to think about it differently. So what I've seen happening across the continent, and particularly in countries like the Philippines, is what we call value-added services, VAS. And what basically is done in the Philippines is that if, for instance, you are providing a micro health insurance or something like that, then the companies tend to do what we call sessions, or they kind of organize sessions with this particular person. So, for instance, they do productive health education, reproductive health education, where they'll bring all the mothers, and in a way, these particular persons that have purchased this particular product will be able to get a value out of the product that they purchase, because most of the time somebody will say, okay, fine, I've had this cover for 1 year, but nothing has come my way. And next year, when you're telling them, guys, you need to renew this particular policy, they'll tell you, okay, fine. Nothing happened to me last year. I didn't hear from you, and nothing. Basically, I don't really think that I need this particular product. But in the Philippines, there are these value-added services that are kind of added to these micro products, or basically the lower pyramid, lower end type of products, whereby these consumers are kept in check in terms of the product, but also they're given some value in which they are called in for sessions where they are trained and kind of given some, I would say, some skills on particular areas. How then do they maintain their health? How do they maybe do first aid in case there's an issue that they might encounter at home? So as you guys think about your products, think about VAS, think about value-added services that could complement with those people that are never gonna claim, because they might need to get some interaction with you as a company, so that they'll be able to say, okay, fine, even if I didn't claim, but these are these are issues that I managed to really learn out of this particular product. And with that, then some of the value-added services will even reduce claims, and even going further to a point whereby they should be like a premium return based on the performance of that particular portfolio. So that is something that we've seen happening in a number of jurisdictions. Maybe you might not really want to maybe do a premium refund, but maybe think about a discount on renewals based on how the experience has been in the past. So let's think about value-added services that you could complement in your product, as we also look at ways in which we provide the claims to be paid quickly and promptly for those particular persons that have experienced the claim. Thank you.
Elise, I think that's so interesting. And I think part of what you're highlighting, right, is those are, yes, they're a lift, but they're ways to build trust, right? They provide a connector, a place that kind of provides an anchor for why did I get this coverage? And I think that's, again, as we think about reaching underserved markets, is part of what that data showed us, right? Is that there is clearly a lack of trust, a lack of understanding, and maybe a feeling that, right, it's it's this sort of thing that doesn't really totally make sense, right? But if you can actually provide something that grounds it, that says, sure, even if you don't use this for a year, look at all the ways in which this has already helped you, which can then, of course, be an incentive to re-up your insurance, but also it's a great incentive to get it in the first place. And then it ties back again to that concept of word of mouth, right? If somebody says, I went to this great training that's connected to this really inexpensive insurance that I have, right? Then you've got this really nice way of kind of pulling on all the different angles that we discussed. So thank you so much for sharing. Dumebi, did you want to jump in? Or did we already?
Well, yes.
Oh, sorry.
I figured that it's been spoken a lot about, so I just thought to, but maybe I'll just quickly say what I wanted to say. In 2020, during the events of NSAS, one of the aftermath of it was the fact that a lot of SMEs, a lot of small business enterprises were left in very precarious situations because they were not insured, even though they occupied or they seemingly occupied premises that were insured by some organizations. So case in point, Circle Mall, for instance, was insured. The building itself was insured, but then the SMEs inside of Circle Mall, as well as other shopping malls or complexes that were destroyed, were not insured. And I think that it was just to sort of dive on the point that a lot of information is yet to get out to the people that should get it. And I was very happy when Bolu referenced the fact that beyond, say, for instance, the Oracle doing some publication or some storytelling about how we are or how we're trying to address the underserved, we should somewhat of a more global or holistic approach, because truth be told, the quantum of information that needs to go out, so the cost that would be associated with that, most insurance companies or would not want to take on that cost personally, and I think that's something that has really impacted the quality and the amount, so to speak, of information that has gone out. So moving forward, testimonials coming through from people who have basic. I mean, and I'm speaking to corporate organizations. Take for instance, the Dangote, who is a heavy beneficiary of insurance products and services, but has rarely said anything about how much of impact insurance has made in his own business, in his entire business chain. Dangote is a billionaire paying insurance premium contributor, and yet I'm yet to see a time when he's ever said anything about insurance. And so, leveraging on what Bolo has said, would there ever be a time? Can we think of a time when, for instance, IFA and NICOM can collaborate with organizations such as Dangote that have benefited from this kind of gain from insurance? Preaching, going about and telling the importance of insurance, and perhaps we might be able to reach more people than maybe a Sirako or KU doing some publication or storytelling about insurance will be able to reach out. So I just wanted to show you that beyond the research and analysis, beyond the data that we go beyond that, make much more impact of reaching out to the people as global body, not as maybe Tobacco or PU or GAMP, for instance.
Maybe I'm glad to kind of hear your additional perspective and insight. I'll pause if there are any reactions or anything anyone wants to jump in. Otherwise, I think it's an interesting lead in, and Elias as well, your statement around sort of how we actually get users. So I'd love to also then begin to move into the channels around distribution, but I want to pause if there are any other questions or places we want to discuss further. All right, Tim, I'm going to take the silence as your opportunity to jump in and start digging into channels.
Thank you very much, Emma, and thanks everyone. I think just before I jump into this, we actually kind of looked forward to hearing from the kind of providers in the room, maybe kind of some innovative ways of mechanisms through which we're trying to address some of these barriers. I think we've heard some of that, but it would just be good. I think we would love to see some, but I think even pointing to, I'm not sure if it was Tim Tokwe's kind of comment around, we need to put out there really how we are trying to address the customer needs, whether it's storytelling, whether it's how we're actually touching people. I'll just give an example. I have health insurance and I do have life insurance. In the last 4 years, I've only received, say, 1 or 2 communications from my life insurance provider, and I will not mention names for the sake of it. But health insurance, there's always, you know, like Elias mentioned, the information they're giving me probably on a weekly basis. I mean, from when COVID started, on how to cope with COVID, how to prevent this. They were ready to come into the organization to provide some workshops, to, you know, so there's that increasing the value proposition that you're offering to the customer, and you know, beyond just claims, making sure that you're involved in the customer lives. And I think someone also mentioned around helping them to prevent, not just to cope with shock. So I do agree, but I mean, outside of this conversation, we would love to see also how providers are mitigating some of these barriers, particularly using innovative technology to do that. We'll jump into this. So distribution channels. We do think that this still remains an issue in Nigeria. So when you ask people how source of microinsurance, and this says microinsurance, but I tell you this similar for insurance as well. So the insurance company, agents, and then family members, your employer, because we see that most people who are using insurance are in the formal space, and obviously there's regulation and legislation that insists that is done. So from what we can see, there's little use of kind of more innovative distribution mechanisms like mobile network operators or other, you know, technology in terms of distribution channels. So we are encouraging partnerships. We know that on one hand, if I could just go to the next slide and then I'll pick up this point as we go along. When we look across the African continent, we do see other countries that have leveraged maybe banks or informal providers to actually drive insurance uptake. So we see that in South Africa, and we know that in Nigeria we are largely bank-led system, running bank-led system. I think 45% of adult Nigerians are banked. So we would want to encourage more partnerships, more collaboration. And we can also see that some countries are also leveraging on informal providers to drive uptake. So they're not providing services, insurance services, but they are serving as distribution channels. And when we looked at the trust factor, if you remember the slide we showed earlier on, we see that adult Nigerians actually trust some of these informal providers more than the insurance company. So, but just say let's leverage on providers who already have this kind of connection with the you know, the customers that we're trying to reach. Again, when we look at those who specifically say that they're interested in microinsurance, like we said earlier on, more than half of them are banked, and 1/3 of them actually trust they completely trust the mobile network operator. So, and we've just put this because we know that, I mean, Nigeria is a very large country. When you're asking yourself, where should I, where should I kind of expand my reach, target customers? We see the South have, we can look at some of the indicators that we've pointed to in terms of the profile of people who are already using insurance. We see that resonate more in the South and maybe also in North Central compared to some of the Northwest and the Northeast. So as we're thinking about driving uptake, we could leverage on areas where we know that people are probably better positioned to appreciate the need for insurance and then reach out to those communities or those areas faster. So when we've just looked at kind of microinsurance uptake across Africa, most providers have mentioned the fact that distribution is a critical factor to drive uptake. And I think Elias mentioned Ghana earlier as he was speaking, and that's one country where we could draw some learnings from in terms of how they've leveraged on their mobile network operator to drive insurance uptake. In Nigeria, one way that we can walk around the regulation that we have, I think someone mentioned earlier on, is through either bundled services. So as much as we might not have the provider or the MNO being able to accept payment and all of that, but then if we're bundling this with other services, value add, right, we might be able to expand the reach. And I think someone gave a good example of what you're doing with Airtel, and I think that's very impressive. We do know that mobile money has not taken off as it has done in other countries, but then mobile phone ownership in Nigeria is growing. So, I mean, if we're not working with the banks, we must be working with the telcos. If we're trying to reach the stakeholders of interest that we're looking at. We also think that agent networks is something that we should be leveraging at this point, because in the past 2 years, there's been drastic uptake from I think in 2018, we had less than 10% of adult Nigerians who had used the bank agent. And in 2020, that number had more than doubled. So a lot of people are using agents, they're now everywhere. So we should be collaborating with providers who have these networks across the country to drive uptake of insurance. So it would be good, to hear your thoughts, but I think at this point also maybe we could also hear of how we are leveraging on these channels, and I think maybe even share learning so that providers on the platform could see how our peers are doing and what opportunities there are. So thank you.
Thank you. Tunde.
Thanks again, Choma, for sharing very, apt and succinct information. I want to take on what you said, the last thing about the use of agents, right? That's something that we're seeing taking a very rapid adoption all across the country, especially in the attempt to pull the unbanked into the banking net, right? A lot of the people do their daily transactions of financial daily services, get their products, through these agents. And I think as of last year, there's a report that was shared by, I'm not sure whether it was Tech About someone, they said that the country now had about 900,000 of these agents all around, right? And if statistically from what you are also showing, seeing the increase in uptake and adoption, right? It only just makes sense, for every service provider on this call to sort of model what they're actually trying to do to embed or bundle, as the case may be, on such avenues, because those are channels that will definitely, they get into the trenches, they get into the suburbs, into the rural areas, and it pretty much mirrors the kind of like what the model that M-Pesa, is being able to achieve very, very well, in a place like Kenya, and if that is factored in as a new channel, it's not exactly a technology-driven channel per se, but it's the tech providers who are the fintech companies like Bankly, etc., that are providing this solution and empowering agents. That is one way that one can use to upscale the uptake of insurance products and services. And again, if you look at what is also happening, even the banks, the traditional banks, are now also going via that route to compete with the fintech companies to create their own agency solutions. I just, pleasantly saw before this call, and I was just laughing and smiling to myself, like Access Bank, is trying to also roll out something, in that regard. So ultimately, everyone is beginning to identify that, agency will do a lot of driving in financial services. And if it does that successfully for financial services, naturally, it will be by an extension to insurance services as well. Also speaking to what you mentioned on embedding and bonding products, it's interesting how with the Cornerstone Insurance example I was giving earlier, how several players have tried to do this, in Nigeria. I mean, most of us on this call will probably be familiar with Richard. That's Richard Leftley. Now Richard is, a very strong pioneer when it comes to micro insurance, and he's done a lot of phenomenal work in different parts, of the globe. And I recall having a conversation with him when he was talking about how when he was trying to met out when his company was still called Micro Insure in Nigeria, to get the regulators to sign him up and everything. And he was just being tossed around from NICOM to NCC to CBN. And then he moved just next door to Ghana. And then within a space of 3 years or so, was able to sign up about 2 million policies, right? So, and he talks very fondly about what he describes as the ringtone model, which is a concept of also embedding or bonding the product onto what is already currently existing. So definitely, these are new channels or existing channels. The infrastructure is already there. It's just that everyone on this call, we all have to look for how we can, play smartly around it to sort of like, use these avenues. Yes, there may be regulatory restrictions, but we can use these avenues to sort of partner, bundle, and provide innovation through other outlets. I'll stop there for now. Thanks, Emma and Choma.
Thank you. Tematope.
Yeah, so this time around, I'm going to be asking a question. I'd like to ask Dr. Tunde, then maybe after Dr. Tunde, then maybe Chioma can also chime in on this question. So I'd like to ask, is microinsurance the way forward to deepening insurance uptake in Nigeria? I mean, and if yes, how do you think we can begin to redefine the existing product? Because if the existing product are not redefined or remodeled, right, it's not going to suit the microinsurance kind of way. I mean, it's not going to be, we can't be selling the existing products, right, the way they are as a microinsurance product, right? So how do you think we can begin to do that vis-a-vis regulatory approval? Over to you, Dr. Tunde.
All right, thanks, Hopper. Well, I mean, from my own perspective and lenses, right, what I would say is I think it's critical for everyone on this call, for all of us to rethink our business models across 3 dimensions. Number 1 is from the customer's perspective. 2 is from our own sales force, right? How do we get to fortify our sales force, whether the use of MGAs or our own internal sales force to push out our products? And then 3 is what kind of technology enablers are we deploying, right? And when it comes to particularly data and analytics, because there's a lot that is going on already. The infrastructure, the system already has an existing infrastructure. Unfortunately, it's just in fragments and silos. It's not all tied together, right? And so if we're rethinking our business models along these lines, it gives us an avenue to look for how we can increase distribution, right? And alternative channels of pushing out our products. The other thing is, again, very simply put, if we look at what is happening in the fintech space, right, is we start to rethink the currently existing processes and the experiences and the kind of products, right? Is there a product, more often than not, we talk about market product fit, right? And, we sometimes can get caught off in trying to achieve our metrics versus actually even working to create what actually fits the customer end precisely, right? And so for companies and tech startups that have been able to do this successfully, ultimately is a case of creating value and then money following, right? So you create this very strong value, all the customers just falling into place at the end of the day. So yes, microinsurance indeed is one of the channels, but again, I personally don't, and this is just my own opinion, I don't see, microinsurance is always just looked as the lower hanging fruit of insurance. Like, okay, so it's small, it's not, it's really just about, at the end of the day, how does the product get to the mass markets, okay? And the mass market doesn't really care whether you say it's microinsurance, whether you say it's traditional insurance or insurtech or whatever you call it. This mass market is just interested in how do I get value for my money? And at the end of the day, I know I should be protecting myself, right? But I just cannot trust the system for this to happen, okay? Let's not forget, when we still talk about the mass markets, right? If you take, I don't know, maybe Choma can mention this, maybe they have some data on it, but if you take everyone on this call, I'm sure if you were to compare everyone on this call with 3 random people, right, who earn, say, maybe $2 a day or $3 a day, right? Those group of people are actually participating and doing more informal contributions than all of us on this call, right? I'll give a very practical example. A plumber that I've known for 15 years, right? And I asked, we're talking just casually, and he was telling me how he was under pressure and he needed to deliver his contributions. And I asked him, how many contributions are you doing? And he said he's doing 3. I said, 3? How? Right? So he's doing 20,000 naira here, 10,000 naira here, another 15K. And I'm like, are you serious? So how are you able to? And he does it very diligently. And guess what? They have their own risk mitigation strategies where they do not default. It has no tech, has nothing. It's just the reality of what happens. Do you understand? So, I mean, to wrap up, so I give Chairman the opportunity to talk. I think these are the 3 major business models to rethink what we're building across these dimensions. Again, one is about around the customers. 2 is our sales force, and then what kind of regulars we're creating. Stop there for now. But thanks, Tope.
So maybe Chioma can chime on that role.
Hi. I think kind of agree what Tunde just alluded to. Microinsurance is very important, but again, I think it depends on the segment that we are choosing to serve. Understanding that customer, whether it's low income or whether it's the informal, those in the informal sector or those who are employed, they are different. We can't see them as one. So understanding the customer, I think, is very important. And I think designing for the customer is also very, very important. We've spoken to things around messaging. I think that's very, very important when it comes to insurance. So how are we communicating what we are offering? Because again, we don't have that on this deck, but when you just see how the reason why people actually pick the financial services that they use, whether it is savings or loans or remittances, the reason why they choose the providers or the channels that they use is really for ease, simplicity, convenience. Trust comes up maybe third, fourth. Price, you almost apart from those people who say, okay, maybe I'm unemployed or I don't have a job, price is not even the top. So the convenience, the simplicity, the way, I think the product design, the way the product is actually designed is something that we really, really should be looking out for. Low-income people in the informal sector are actually time-starved. They don't have time. They don't have enough information. So making it simple for them to choose, simple for them to access would really, really be important in terms of getting them on board. So, and then obviously technology should help us do this seamlessly and make it easy for them. We know that I think Emma has been hammering on this. A lot of them are on their phones. A lot of them have phones and are using their phones to manage their financial lives. So we can jump on that and leverage on that. So yeah, I think we could deliberate more on this, and then what's been working for you, kind of let's just share learnings.
Thanks, Choma. One thing that I just also wanted to share is, because when we look at what is really happening in our environment, right? If we look at the global economic trends and we now look at the emerging ones, the ones that are peculiar to our environment, right? Where you have concepts of usage-based payment systems, hyper-personalization, software you're doing, pay you, so it's usage-based. Those are things that those are morphs and different variations that the customers are just taking over time, right? Because like 5 years ago, it didn't make sense. If you had said, okay, so I'll only pay for this, it was almost mission impossible. But hey, today it's a different story entirely, right? And so the customer will continue to morph, based on the appetites, So I think looking at it and, building around that is a very strong value proposition that, I like to talk a lot about. And I'll give a practical example again from the financial service sector for mass markets. A microfinance bank that we might all know well, Lapo Microfinance. I don't know anyone in their management. I've not had any professional interactions with them, but I know so much about this organization. Why? It's the people that have benefited from them that markets them, right? Example, my mechanic who I've worked with for over 10 years gives raving reviews about Lapo Microfinance Bank. Talks about how they've helped him when he was down, talks about how he does his diligence savings, how the agents, he and the agents, they go for parties, the agent from the bank, they go to their friends, they go to parties together and everything, and interestingly, I've interacted with other people who also get to mention at that level, like, oh no, Lapo is their savior, raving reviews, right? Guess what? No tech, nothing. All these guys do is they come around to collect their 500 naira, 1,000 naira, they tick their contribution and that's it. And anytime they need money, they need a loan, no stories asked, they give them the loan, right? So I think those are kind of them. But personally, I think there should be a case study on how they've been able to penetrate the market, because everywhere it looks like they're the only ones I hear about who are in that segment. But obviously, there are loads of microfinance banks. But what are they doing that they've been able to do very well that the real mass markets have been able to get their value from them? So, thanks.
Yeah. So I think Dr. Tunde has been able to throw some new, really interesting dimension into what microinsurance is, because essentially while he was talking, he mentioned the fact that to some people, when you say microinsurance, it looks like you're talking about a low ball, a substandard kind of product in the insurance space, right? So which means we need to start defining what microinsurance is, right? So in your view, Dr. Tunde, what exactly would be the appropriate definition of microinsurance? And probably after you, Chema can also, through their various interactions with while coming with this research, tell us what they think
Okay, I don't know whether it's from my end, but I can't hear you anymore.
Oh, sorry.
Okay, but I think
can
I
you hear
got.
me now?
Yeah, but I think I got a gist of what you were trying to say.
All right. Go ahead, sir.
Okay. Well, in simple terms, it should be pay for what I need insurance, right? Really, that's what it should be, right? It's really about why do I need an insurance cover for taking health, for example? Why do I need to have an insurance cover for root canal therapy, extensive dental procedures, when I haven't visited the dentist in like 5 years, right? But I know that I need to have an insurance cover for malaria, because likelihood is that I'm going to go get malaria at least once in a year. Okay, so I would rather say, okay, so it's really about that emerging trend of let me just pay and cover myself for what I know I'm likely to be exposed to, which is typically what insurance will run away from, because that way you're going to utilize. But that's another conversation entirely. But it's that model of being able to structure it around pay for what is needed. And the truth of the matter is, economically, the financial gap is widening, right? The paying power is reducing. You're even having corporates that had the financial muscle to pay for heavy premium products now also moving towards the end of, hey, why do we need to spend so much money paying for heavy premiums when we can just get a short-term policy that will cover us for what we need, right? Because paying power is reducing. We all know the woes of the economic indices in Nigeria. So everyone is trying to save the buck. I'll stop there.
Yeah, thank you, Dr. Sunday. I don't know if Chema want to chime in.
Hi. Yes, I think when it comes to micro insurance, I think the size of the premium and the insured amount is really what we have kind of what we've looked at in terms of how to define that. At least in the survey, at least. I also just wanted to speak to Dr. Tunde spoke about LAPO earlier on, and in my former life, I used to work with LAPO, and I think really what they've done that's differentiated them is the fact that they've often designed with the customer in mind. I'll give you an example. LAPO has kind of, by the time I was leaving them, they had like more than 20 products that were all targeted at meeting a certain need. So they probably will have a loan or a savings product for your child, a savings product for your health, a savings product for like maybe a festive period, a savings product for your business, and then loans that are targeted at each of them. So they are at every point in time anticipating what the customer will need, and then making you aware of maybe what you would need and how they have products that are designed to help you. So even as a woman, there are products that anticipate, and then they also have value-added services like Elias was mentioning earlier on. So they have kind of things for your children who are going to have scholarship programs. They have programs that could help women who are in marriages, help them understand their rights. So there are a lot, they're basically putting the customer at the center and then thinking about what would you need at different stages of your life, and then helping them building products that would help you do that. So I do think that as insurance providers, doing that, it sounds like, oh yeah, we know that, but really, how well are we doing it in terms of actually implementing it? We sometimes have products that are generic. I think that we need to structure our products to really, really meet. Sometimes people don't even know that you can have a product that will help them meet that need. It's our job to really anticipate those needs and then help people kind of see how well these products can meet their needs. I think I would stop there.
Thank you. You read my mind. I just want to give you your last moment to share this last piece of data. So I'm going to hand it back to you.
All right, thank you very much, Emma. Sorry, this is quite a kind of a bulky slide. Well, we wanted to just, I mean, I think this goes back to the idea of thinking with the customer in mind. So in 2019, we worked with Dalberg on a project that was nationally representative, a survey basically that collected data around the financial lives of Nigerians. And based on that, we've been able to come up with 6 different personas. And based on the characteristics of these persons in terms of age, gender, source of income, also some kind of behavioral traits as well. We've been able to kind of develop these personas and also recommend to providers what kind of products should be designed to target them, the characteristics of the product, and also probably also the channels that should be used to reach them as well. So maybe we'll not go into all of them, but so take an example. You see the traditional believers. These are low-income individuals who actually would have issues around trust. So and also have issues around managing their financial lives, right? So they have limited education, maybe small business owners. And so when it comes to insurance, we're suggesting that, you know, we should have bundled services that would help them address some of their other financial needs as well. So include financial planning tools, because some of them will take up insurance if they know what it means to them, if they know how to actually use it, right? So include financial planning tools, debt management, and then also make this easy for them. So automate most of the processes. They don't have to think about, so thinking ahead, right? I just mentioned that. So that could be some of the products that we could come up with. And then in terms of the characteristics, products should be simple, non-technical language. And I think, I mean, in this space, we are guilty of that. When you pick an insurance policy, like even I myself would probably not want to go through all of that. So the language in which we communicate this, then I mean, I think I've mentioned this, anticipate their future anxieties, right? I think that's important because of the people we're trying to reach. We need to understand that some of them cannot do this for themselves. They don't feel that they have the capacity to do that. So if we do it for them, we probably can, it could sell that. And then we've also looked at distribution channels. Most of them are probably in one group or another. So reaching out to them through their community groups, through associations where they already have trust would be important. So we do have this deck I will share with you and with the rest of the team, but we just wanted to use that one kind of scenario to discuss around how we can actually build around the customer. Thank you.
And thanks, Jim. I think, you know, something I'll say 100 times is like, build your customer profile, know who you're actually serving. And I like the way that you chunked the different customer segments and to kind of think about sort of who are they, where do they fall in traditional, not traditional. So I think that's such an important lens. I know that we are moments to time. Tunde, I want you to say your last thoughts. Chioma, anything else from you? But it has been such a delight to hear from you tonight.
Awesome. Thanks, Emma, and thanks, Chioma, again. Chioma, can I ask, that persona that was on the last column, the overreaching, okay, yes, questioning cultivators. On a lighter note, are those the people that we classify as, ourselves as a coconut head, as we so fondly call it? Am I correct, or is that an assumption?
Yes.
Okay,
Yes.
so I'm correct. I figured. So I mean, in reference to that, right? I mean, if we're all on this call, we know what we see on social media. We call it I get coconut head, right? You can imagine selling your product to a coconut head. You know, he's going to question everything from A to Z. And quite frankly speaking, right, you know, looking at the personas that Choma and the team have quite eloquently designed, it shows that the current customer appeal clearly desires affordability, hassle-free experiences, prompt service, amongst all other things, right? And if we look at it, when we look at this burgeoning set of customers, right, in just about 8 years, by 2030, there's a research done by, I think it's a group called David and Burns that says that you will have a retirement of 693 million baby boomers, right? Those are people who were born between 1945 and 1960 or thereabouts. I'm not sure off the top of my head, right? But in 8 years, those people will be retired, right? Because currently they're right now in their mid 50s or thereabouts. And then you're going to have a debut of 1.3 billion Generation Z workers. So 1.3 billion coconut heads coming into the market. How are you going to crack that head, you know, to get this kind of services into their mindset, into their persona, right? You know, because this is a generation where, I mean, we've seen what the things are happening on social media these days. We had the horrible bosses trend that just ended. We've seen another one that is coming up very succinctly and all that. You know, so the question is, as we wrap this up, how do we get to reach these Gen Z customers? Because they're not the same as, you know, the regular customers that you can just give a product and think you can get away with it without actually adding the value, you know. Enough said. I think, you know, we all get the point. It's been an absolute delight being on this call with everyone. Thank you, and I'll stop there for now.
So from our end, I would like to thank everyone that listened in and everyone that contributed. For us, I think we have really reiterated the fact that it's important that, especially for this cohort that is thinking of building insurance products, to think about the customer, to be innovative on how to distribute these insurance products to be built to the customer, and to also look beyond just the end product, selling the insurance policy, to look at the insurance value chain and see where can we deepen or increase adoption to insurance products and services. And I also want to make a clarification that the person that will be hearing her voice is Dr. Oluwatomi Mosale, our research manager. Not Choma. And then also we would definitely share these insights, this slide deck, and then some of the insights we've pulled on insurance from the A2F. Hopefully this will provide more context or more insight as you're building out the product. And hopefully when we run the next A2F, which is sometime this year, we're hoping that most of the insurance products that you have built so far will help move the numbers, because that's the most important thing. We've already said today, just 2% of adult Nigerians have insurance. Hopefully by the next time we're running the survey again, we want to have double-digit numbers. That other countries are there, and there's potential, just like we've said today, there's a wide range of, there's enough potential that Nigeria can meet these numbers if we build the right products for the right customers, distribute it the right way, and yes, to meet the customers' needs. Thank you. Over to you, Emma. Emma, I think you're muted.
I love talking on mute. Sorry, everybody. A huge thank you to the team from Athena for being here to share your insights and your research. Tunde, thank you for helping to contextualize and help us to ground this and what this means. And particularly thank you to this group for your level of engagement and your questions. You know, we're thrilled. So as just for those in the cohort, Athena is a